Welcome to Randscore's EU morning briefing for Monday, the 8th of June 2009. Taking a look then, just gone through 8:30 now in London at the UK and European markets. At the moment, equities across the board are down around 1% margin to 1.5% in the FTSE, CAC and DAX. The dollar index, though, has been a significant mover since the European Open. We're now trading up there over 0.5%. That has weighed on their major pairs. Euro-dollar cable itself already down around 150 pips. Also with the further UK stories, which we'll go into more detail shortly as well, weighing on the pair there, especially with Gordon Brown and the Labour Party coming under further pressure in the latest European election polls. With that dollar index strength at the moment, commodities across the board also coming under pressure. WTI crude futures down over $1.50 so far, back under $67, and spot gold as well dropping down 0.5% this morning, with the dollar strength down to 950 at last check. Taking a look then at some of the stories that I've been looking at and paying attention to. A lot of pieces over the weekend press looking at not getting too carried away in terms of the latest green shoots. Obviously last week a lot of the focus was very much on those global PMI numbers we saw across from China to Europe, UK, all showing positive trends, especially in the UK going over 50, obviously a positive sign there. But again, opinion pieces suggesting otherwise. A lot of articles, firstly just taking a look out of the NBER in America. Their chief Hall says it's way too early to declare the end of a recession, and Robert Schiller, a closely followed analyst or economist in the US and professor at Yale University, he suggests that home prices in the US may decline for some time. Similar note to that as well, the FT Lex column at the weekend saying the latest NFP could mark a calming point in terms of post-crisis developments. However, they do say that it doesn't herald a sustainable recovery. And that allied as well to a Barron's article saying that housing faces another big wave of foreclosures and the jobs report is no cause for celebration. So still a lot of people questioning how good or how prolonged those results from that NFP report, which was better than expected on Friday, will be for. Taking a look elsewhere out of the US, some notable comments. Obviously a lot of focus still very much on the sovereign rating front and potential Treasury purchases. Treasuries will not become a less attractive investment even if the US sovereign credit rating is cut. That was according to Kudrin, the finance minister in Russia, over the weekend. And elsewhere, just drawing attention to Fed's Dudley, who said that if the yield curve is steeper, it's due to a brighter economic outlook. He said it wouldn't warrant more Treasury buying, and says declining US deflation risks lifting yields, but fiscal outlook also a factor. Looking elsewhere then, just on the domestic front in the UK, obviously Gordon Brown faced a renewed challenge to his leadership on Monday. Supporting for the ruling Labour Party plunged to its lowest level in a century in the European elections, and most notably compounding Labour's woes was the fact that the far-right British National Party won 2 seats in European Parliament for the first time. Allied to that as well, the ex-member of the MPC, Blanchflower, has said that UK house prices still have a long way to fall. UK economy won't grow till Q2 of 2010. On the flip side though, there are a few positive press reports in the weekend. The FT saying that the recession in Britain is over for now. A slim majority of economists have said in their latest poll. FT saying 11 of 20 economists surveyed believed the economy had stopped contracting in June and was likely to start growing in coming months, while those who said the economy was still shrinking thought the bottom of the downturn was near. Also as well, just be aware, Chancellor Alistair Darling is in no rush to declare the downturn is over. Darling expected to wait for clearer indications in the rest of the world, although his aides acknowledged some relief that the data has improved considerably. And a quick look in terms of equities. In Asia, the Nikkei did rise 1%. They were still benefiting on the coattails of that NFP report, and the US finished on Friday. However, in Europe, as I mentioned, we are down over 1% in the FTSE, CAC and DAX. One in particular story that did get a lot of press coverage was Barclays over the weekend. They're in final stages of negotiating a deal to merge its fund management arm with American money manager BlackRock. The Barclays BGI division is valued around $13 billion under the terms of the deal, and Barclays is expected to acquire a 20% stake in the enlarged group. We have seen both BlackRock and Barclays confirm they are in talks, however no further details have been disclosed at this time so far. So looking ahead today then, pretty light in terms of economic data, nothing major coming out of the US today. In terms of Eurozone, we'll have Sentex investor confidence at 9:30, followed by the factory orders out of Germany at 11. And then for fixed income will also be eyeing further reverse auctions from both the Bank of England and the Fed later on this afternoon.